name is Mike Haney, and welcome to another edition of 60 Minutes in Black America. We've got a outstanding show for you today with a legend in tax returns, and that is Teddy the Taxman Prioleau. Don't go anywhere. We'll be right back. And again, thank you so much for tuning in to 60 Minutes in Black America. If you're watching us on Facebook, please like our page. If you're watching on YouTube for the first time, please subscribe to our YouTube channel. Very excited to bring the show to you today. As the IRS last week said, it's tax time and you can file your returns. And I know many of you look forward to that because you get some money back. But is that always a good idea? I'm not sure, but that's why we have Teddy the Taxman Prioleau in the studio with us today to talk about taxes. But first, I'd be remiss not to recognize what has gone on this week, particularly in our country, down in Memphis, Tennessee, with the murder of Tyree Nichols at the hands of five Memphis police officers. Mr. Nichols died on January 10th, having been um, severely beaten by the Memphis police. And they just brought the video, the body worn video of his beating out to the public this past Friday. And I got to tell you, I had no intention to watch it. I had seen this picture that you see up on the screen now of him being in the hospital, having been beaten. And so, why would I be inclined to watch something when you can only imagine what has happened? And then, it just puzzled me that they decided to release it on Friday in the evening, 7 o'clock or thereabout, like it was some sort of opening of a premiere show. It was absolutely astounding to me. I don't know how many of you watched it. I don't know how many of you felt the need to watch it, but it wasn't something that I felt that I needed to watch or needed to even show on this show because its imagery itself speaks volumes as to what Black men go through. And, we heard the uh, issue with the fact that it was at the hands of five other Black police officers. And so, what difference does it make that it was at the hands of Black police officers, white police officers? We know that Black men mainly, and Black people in general, have an issue with the police when it comes to motor vehicle stops. And it's been tagged driving while Black. I was watching as I was researching this and looking into it because we're going to have a show on this entirely in 2 weeks with some national experts that talk about some of the legislative needs, some of the changes that have come about as a result of Black people and driving and police departments, because more times than not, this is where it all begins. So there was a woman, a grandmother, down in Raleigh, North Carolina, that was stopped, 70 some years old, didn't hear the police lights and sirens behind her, just playing her church music, driving orally along the highway, and she was stopped. And it actually showed the video of them grabbing her hair when they finally forced her to move over after throwing these nail-ridden rubber tires out to stop her, pulled her by her hair, pulled her out the car, and threw her to the ground. 80 years old. Busted her shoulder so badly that she had to have rotator cuff surgery. Why? Why? Why do we continue to go through this? Why do we continue to go through this, be it in California, Oakland, which has just enacted through its Black police chief new laws that preclude stops and searches of vehicles that were for minor infractions, which many of us go through. And I got to tell you, in my lifetime, I know I've been stopped by the police at least 8 or 9 times, maybe 10 or 11 times. I'm sure there are stories out there of others like me that have been stopped as well. But when does it change? Well, we got to realize that we're only 159 years removed from slavery in this country, or basically, if you're my age, maybe barely 2 generations. And so the slave mentality, either by our own, meaning other blacks, or by caretakers who have the same mentality, has not changed whatsoever, which puts us in a position that we are in now, which is targeted when it comes to many of the laws in our legal books. I like what Philadelphia, Pennsylvania has done recently. They just enacted a driving equality bill. And this bill was brought about by a councilman whose name was Isaiah Thomas. And so essentially what it does, it says that you can't stop a vehicle for expired registration tags, temporary registration permits, a single brake light or headlight out, because that's what usually happens in many jurisdictions. And I'm going to leave that picture up there of Mr. Nichols for a bit so you can get a sense of that, a sense of the atrocity that happened in that case. But this is where, and they charged him or tried to stop him for reckless driving. This is a FedEx driver, 29 years old, a photographer. And guess what he did, similar to what George Floyd did? Beaten so severely, was calling for his mother. Calling for his mother. I did hear that that was on the tape as well. But Philadelphia, Virginia, the Commonwealth of Virginia, the same thing, has decided that no longer can police officers, and the police community was in uproar, because we have to realize the financial implications of these atrocities of stopping people. And in Oakland, California, it was proven that 1 in every 4 of blacks were stopped versus 1 in every 15 whites that were stopped. And, how can you continue to deal with those sorts of atrocities and not feel compelled to do something about them? So you saw protests throughout the country on Friday evening in anticipation of this video that was released. But where does it get us? We've been protesting. We've been free from slavery for 159 years. Civil rights bill passed in the 60s. And we're still dealing with the same thing. So is it a communicable issue, an issue with our communities that we deal with? I'm not sure. But when you look at the legislation of Virginia and what it has done, the legislation of the city of Philadelphia and what it has done to stop the stop and frisk or searches looking for other things, weapons, drugs, and then they've got this thing, I smell the aroma of marijuana. So therefore, get out the car, spread against the side of the car, and let me search you for weapons and other drugs. In your states, in your cities around the country, from those of you that are watching around the country, it's time to hold our politicians accountable so that we can ensure that the Tyree Nichols situation are minimized. Black people are stopped at a rate of 51%, representing only 31%, 13% of this country. Here's a stat from Philadelphia. Out of Philadelphia, Philadelphia said that it had looked at over 309,000 stops. And of those 309 stops, 76% of the stops were of African Americans. And Stanford out in California had a very similar study, and we were less than 20% of the population out there in California. So when does it stop? When do we stop being just, as Dr. McKenzie said earlier in his remarks, just despicable actions by the police, regardless of their color of the police, that when we live in a police state and a police mentality and we're treated as though we're still in slavery and beaten, it's time for that to end. So that's my comments regarding Tyree Nichols. My condolences to his family. May Tyree rest in peace. May his death not go in vain, because we as a people decide that we've had enough and we finally decide to do something so atrocious as this unbelievable butt whipping by the police. So, hey, let's talk about sports. So, this is the final week. We're down to 4 teams. I believe in the last final seconds, Philadelphia looks like they're going to be another good thing from Philadelphia. We talked about Pennsylvania last week and the legislation that their governor passed in Philadelphia, in Pennsylvania last week. We're talking about Philly today in terms of the good legislation they're passed. So maybe the city of brotherly love deserves to go to the Super Bowl, but it looks like they're on their way. And the next game coming up, that starts, I believe, in a half hour or so. But, don't go anywhere. You stay tuned and watch this show for what it is that you need to do with your tax return. So, Philadelphia Eagles, congratulations. Cincinnati Bengals, Kansas City Chiefs coming up next. And I expect a very exciting game. And to tell you the truth, I don't know. I don't care. My team, the Baltimore Ravens, aren't there. So I just want to see a good game. But today we have in the studio with us a gentleman I've been watching for probably a couple of decades. He has been on every major TV news show in the region, from WHUR and radio in Washington, D.C., to all of the TV shows in the greater Baltimore area, because, especially at this time, because he is renowned for his expertise and his personality when it comes to taxes and tax seasons. And so, what is it that we need to talk about, from going from a physical tail whipping, as we saw with Tyree, to stopping the financial tail whipping that we get financially, and particularly in a year like this where it is said that it's going to be a recession. So recessions usually affect our communities a little differently because our assets are a little different, we save a little different, and our income's a little different. And so we hope that Teddy, the tax man, sheds some light and gives us some information as to whether and how we can make the IRS and the tax laws our friends. And does it make sense for me to hold back my deductions every year looking for a return from the IRS of what I've overpaid in taxes versus, for instance, maybe buying some stock, maybe investing in property so that I have some capital and some assets? And is that the key to generational wealth? Well, Teddy's transitioned into retirement funds and advising people on retirement income, et cetera. And we're going to talk about that today. So don't go anywhere. So let me welcome Teddy Prioleau, Teddy the tax man, into our studio. Teddy, how you doing today? And thank you,
Michael,
so much for being with us.
Absolutely, Michael. And to answer your first question, I'm doing pretty well. I am doing pretty well. I got a little ways to go, but I'm ready for that trip. Hey, and you know what? May I correct you on something? You said to make the IRS our friend, or maybe we won't go that far.
Well, they're a natural adversary for everybody. Is that it?
Right. But maybe we can do some things that will get them to look the other way. How about that?
Hey, well, listen, I like that suggestion. And that's why I tell people this is a great show. Hey, look, Kansas City and Cincinnati will be there. But to get a strategy from this man, and we want to find out a little bit about what's going on with you now, Mr. Prioleau, in terms of, I know you've done over 18,000 tax returns which if you're in the Baltimore arena, that's 6,000 more seats if you were to put a tax return in a building than that arena holds, right? 18,000, Teddy. Teddy, man, what was that like? And what are you doing now?
Michael, I did my first legal tax return on February 28th, 1980. My first legal tax return on February 28th, 1980. And hey, Michael, I had to get legal. You know why? Because the very, very first legal tax return that I did was for a pastor. So I wasn't going to do it any other way, Michael. I mean, that was the way to take care of business. So from that point on, it's really been straight up. Yeah, I've done a ton of tax returns in February 28th will begin my 43rd year. And so I am all about trying to infuse hope and a change in mindset so that we as a people can have a different ending than what is anticipated of us.
Well, Teddy, that's what my hope is by having you today. We want to talk about what you're doing now, particularly because you've transitioned, as I said earlier, away from the tax returns. And
Mm-hmm.
so is it really more of a wider nest of what you're educating and assisting people in with their assets,
Yeah.
right? So talk about what you're doing nowadays before we get into some specifics about what a bit of what you've done in the past, some of the IRS law changes, some of the benefits, and
Mm-hmm.
how we as a community can benefit from information and understanding ourselves more of what's happening with the Internal Revenue Service.
Yeah, Michael, one of the things that I saw was the need for us to be better at our retirement savings. I'll give you an example. Back in, I think it was '04, I was meeting with a client and I was talking about obviously the tax return, but I asked him, I said, hey, do you participate in your company's 401k plan? And he was at this particular entity for 20 years, Michael. I'm not kidding. He was at this particular entity for 20 years. He looked at me with a serious face after I asked him, hey, are you participating in your company's 401k plan? And he said to me, what is a 401k plan? Let me reiterate, this was after 20 years of his serving that particular entity. It was the local utility company. 20 years, Michael. So obviously he had nothing in his retirement plan, his 401k plan. So my objective is to change mindsets. And if I can change mindsets, I think people's retirements will grow. I'll give you a good one. I'll give you a good one. One that I promise you've never heard this one before. Promise you've never heard this one before. And that's what I'm looking for. I'm looking for different things so that we can give to the folk and they can implement them almost right away. How about this one right here? If you typically get a refund, I don't care how much, if you typically get a refund and nothing has changed for 2022, probably means you're going to get a refund this year. How about doing this? Long before you get your tax return prepared, how about setting up an IRA? And then when your tax return is prepared and you find that you're getting a refund, how about having the refund go directly to the IRA? Michael, I bet you've never heard that before, right?
No, I haven't, man. So what kind of break does that give you? A tax break for the following year or for that current year? Or how does that work so that we understand? Because you're right, many of us don't do that, right?
Yeah. Absolutely. Very, very few, as a matter of fact. So I'm going to reduce it to that. Very, very few people do that. And that's okay because there aren't a whole lot of people giving this particular advice. So what I'm saying is this. I'm just going to repeat it. You're going to refund. Go ahead, even before you go to get your tax return prepared, set up your IRA, and maybe the company might require you to put $50 in and $100 in to start it. I don't know. And that's going to vary depending on the company, as a matter of fact. Set it up. And then when your advisor finishes preparing that tax return, you can say to the advisor, I want this to go to my IRA. Now, before you ask, Michael, you're going to say, well, wait a minute. So should I have my entire refund go to the IRA? Before you ask that, Michael, I'm saying this. Not necessarily. Let's say you're getting $1,000 refund. How about having 750 go towards your IRA and then 250 go somewhere else? You can do that. You can do that. You can have a split refund where, and matter of fact, in the state of Maryland in particular, you can have your refunds go to 6 different places if you're getting a federal and a state refund. How do you like that, Michael?
Wow, that's interesting, man. And let me ask you before we go to that forward, looking back on the returns that you did, and you noticed that many didn't participate in their IRA plan at work. Are there other things that you saw that you advise people, wow, you shouldn't do it this way, that we could look at now? Because what I'm hoping our viewers do is get a pencil and a piece of paper and take note to what you're saying. So they're guiding their advisor or their tax preparer instead of their tax preparer or advisor guiding them. And because some of us just take it there and leave it because we're so apprehensive, and as long as we don't owe, we're happy. And is that the wrong mentality to always look at?
Because I'm from the real world, Michael, I say getting a refund is not all that bad. It's just not. Back in the day, it was, hey, look, instead of getting a refund, why not take that extra money that you're getting your paycheck and invest it or put it in a savings account? Well, you know what a savings account is paying nowadays. So at the end of the year, is that going to be realistic? Probably not. Well, how about investing it? Is that going to be realistic? No, because probably not, because we're only talking about a small amount of money. I'm talking about investing for investing purposes right now. So is that going to help? It will, but again, you're talking to a person from the real world, and I know how most Americans save or they don't save, and so I say get your refund and be happy with it. Just spend it wisely. So let's go back. We got to keep hitting this so that people can understand. Yes, you can set that IRA up before you have your tax return prepared. I recommend it. Set that up. When the tax return is prepared, you tell your advisor you want a portion to go to that, and then you want a portion to go to wherever else, your checking account or your savings account or whatever the case may be.
Well, let me ask you, Teddy, why do people get refunds? Because they overpay what the government asks them to pay? If that's the case, why would I want to does the government give me interest on my return? Do they pay me an interest on what it is that they owe me when I file for my return?
No.
So why do I do that? Why do I set it up so that I'm owed money instead of maybe taking some extra deductions, using that money, buying stock, and having different implications? Because there could be different implications on what I invest on the course of the tax year, say 2022, instead of getting a $2,000 tax return check in 2023, I take that $2,000 in 2022 and invest it in stocks or invest in IRA. Does that make more sense and have different implications when I file my 2022 taxes in 2023?
Let me answer your first question first. Your first question was, Teddy, why do I do that? The answer is because your parents did it. Your friends do it. Your colleagues do it. Your relatives do it. So it becomes a normal thing. That's why you do it, Michael.
So I'm not doing it because it's right. I'm just doing it because I don't know no better.
You don't know any better. You don't know.
So why did you let 18,000 people potentially come to you and say, oh, you got $3,000 coming back to you this year. Good job. And then the next year is telling them, hey, listen, you take more deductions, so that you don't have this much money. And this is what I want you to invest in with your discretionary income, because that's what it is. That $3,000 that you get a year later is actually your money that you could do this, this. Is it because we're not disciplined enough as
You,
people with
yeah,
our money?
the training, Michael, the training. Your training is everything. And I just said to you, everybody around you is doing it. Everybody wants that $1,000 refund, the $1,200 refund. Everybody does. Do you know why, Michael? It's because Americans are the worst savers out there. That is why we're not taught to save. And so if we're not taught to save, we aren't going to save. This is not tricky. It's not complex or anything like that. Michael, you can sit there and tell a client all you want. Hey, instead of having $700 come out of your pay in taxes, you're getting that $3,000 refund. Why don't you divide the 3,000? I'm going to say this slowly. Why don't you divide that 3,000 up by 12? Whatever your answer is, you have that much less coming out of your pay in federal taxes. You take that and you put it somewhere. You
Wow.
invest it, as you said, right? That's a good way to do it, Michael. But I got to tell you, we have talked, we as advisors, especially advanced advisors, we have said that until look, matter of fact, let me tell you something. I was light-skinned before I started telling people that. Now I'm almost blue in the face. Do you get what I'm saying?
Well, let me ask you another question. Let's define savings. Let's define savings, because you made a statement early on. We know what the savings rates are, less than 0.5%, although they're moving up a little bit, but less than 0.5%. So I make less than a nickel on my money that I give a bank that then comes back and charges me 5 or 6% to borrow money to get a house, or 10% to buy a used car, or whatever. So they're paying me 0.5%. But savings could be IRA, savings could be stock, crypto stock, a multitude of things. So give our viewers, because we're trying to change a mindset. They told me that I should have 6 months worth of savings in the event of a rainy day fund. But that's not the case, right? We don't save like that. But define savings for us so that we understand how to save, other than putting in our money in the federal savings and loan account that only gives us a less than a nickel on the dollar of our money.
Yeah. All right. So,
under the mattress? Should I put it under the mattress?
You don't want to put it under the mattress, Michael. And I will say investing it is better than just putting it in a savings account. But what I'm trying to get folks to understand is they've got to start somewhere. And I'm never going to back off getting a refund. I'm going to say this for the third time in this short period in which we've been speaking. I'm from the real world. I know that people don't save well. I know that I can talk to them until I'm tired and you blue in the face and all that kind of stuff, but it just doesn't work for every household, Michael. And that's what I'm trying to say.
So households, let's define households. Households, and because households were defined differently when you have two working parents, right, who are in a different tax bracket than a parent that works and a parent that stays home, right? Because is that true? So in the black community, because I want to zero in on married couples, since you brought it up, and the implications of filing jointly versus in Canada, which is different, and they don't have. Oh, you're laughing because you know where I'm going, right? And this is what we don't understand, right? So I've got two people working in a household, my mom and dad, both making $12.50 an hour, right?
Mm-hmm.
Which makes combined $25 an hour,
Mm-hmm.
right?
Mm-hmm.
And they are paying a higher income because they're filing jointly versus a family in another demographic or community where the dad makes $25 an hour, the mom stays home, right? Stays home, same household income, but they're in a different tax bracket. Is that true?
No, you don't have that exactly right. Um, $25,000 in taxable income is $25,000 in taxable income. The difference, there aren't a whole lot of differences except for when it comes down to credits that a person might get on his or her tax return.
So you're saying I could pay my wife money being a housemaker, or my wife paid me being a homemaker, and I could pay her some of that 25,000, and it puts me in a different tax bracket now. Can I get slick like that
No, you can't. And you know why? Because,
anymore?
because you're filing a joint return, Michael. So it's going all on the same tax return. It doesn't matter whether you call yourself paying your spouse, et cetera, et cetera. Okay, but that's not even number one. Number one is, do you have a business? If you don't have a business, Michael, you're not going to pay your spouse to do anything. Any exchange between spouses is, for the most part, not taxable. And I should say, generally speaking, because there's always going to be an isolated incident out there. But generally speaking, anything that you pay your spouse is not even considered extra. You're still going to file that joint tax return, and the chips
I'm
are going to
still going to because I have to. Does it make sense for me to do so, or should I file individually? Tell me some of these tips from the IRS there, Teddy. I know you know. I know you know. Tell me, man.
okay, you got me. You got me. Listen, if you are married, I highly recommend filing a joint return. Look at a joint return first before you look at a married filing separate return. Guess what? Married filing separate returns actually have higher income tax rates, and the credits that a person can claim on a married filing separate return are fewer. How about that? So generally speaking. So if, let's say, you have a child and you are married filing separately, you pay all this money to the college for your child to attend. Guess what? If you're married filing separately, you don't get to claim that credit. Earned income credit. If you are married filing separately, you're not going to get earned income credit. So it's it's kind of difficult to paint this, what do they say, with a wide stroke, paint brush with a wide stroke. But generally speaking, you're better off filing a joint return than you are filing a married filing separate return, Michael. That's true. That's true. If you've got a business, now we can talk something totally different. You know,
Okay, well, let's talk that, Teddy. Let's talk business. Let's talk. Everybody has 1,000 LLCs, right? 1,000 different LLCs. What's the legality of me setting up? Hey, tell us what's up, man, because, we look at someone like Donald Trump as the model that paid $750 in taxes on $200+ million, and we know net profit, right? Setting up 1,000 different LLCs. Does it make sense for me as a business, as a family, to set up an LLC? Is there something to be gained in that strategy, Teddy?
no, not really.
No,
Why?
no. Tell me why not really. Because
Listen.
if it's really versus not really, maybe there is, but it's too complicated for us.
Oh, Michael, okay, you went there. All right. Okay. So I'm not crazy about filing, having multiple LLCs unless you have multiple services and or products. It does not make sense. That's number one. Wait a minute. Let's reel that back in. I am not one for having multiple businesses. Not Let's not use the term LLCs, because I think people look at that wrongly. This is what happens. And I'm telling you, I know there are tax advisors watching and listening to this show right now who will agree with this. Folks will come in and they will say, "Hey, Teddy the tax man, look, I started a new LLC. and this is last year, Michael. They didn't come to me. That person didn't come to me for advice on setting up or starting a business. Now, let's not use the term LLC. That person didn't come to me for advice on starting it up. This person came to me after the fact, which means in French, that's a fait accompli, right? It's already been done, right? It's already been done. And I will sit there and I'll say, so why did you not consult me before you started? Now I'm going to use this term again, an LLC. This is what happens. And then I'll say, so who told you that the best entity for what you were doing is an LLC? And inevitably they're going to say, oh, my Uncle Pete told me to set up an LLC. Oh, really? What does your Uncle Pete do? Oh, he's a barber. Nothing against barbers, obviously. Michael, what I'm saying is he's not a tax consultant. He's not a tax professional. So you got all these folks setting up these LLCs. Many times it's for naught. If you don't have a legitimate business, if you don't have a legitimate product, if you don't have a legitimate service, there's no need to set up an LLC. It's not going to save you any more in taxes than you're saving right now.
Wow. Hey, well, listen, that's interesting because people, I guess when we look at it, particularly in our community, because this is called 60 Minutes in Black America. And Black America wants to know why the IRS will audit those that are making $25,000 or less, right? Maybe they have $20,000 in the deductions. I'm not sure what it is, right? What the trigger is, right? Because even though it's not biased, even though they don't have color, etc., on their application or form, you can tell from a profile what it is. And then you look at someone like Elon Musk, you look at someone like Donald Trump, and you see their ability to deduct. We know that, the rich have a different threshold as a percentage of their income, like 8%, versus those that make less. Well, this is what I looked at and researched, right? Versus those that make much, much less, that have a threshold of between 12 and 16% of their income.
Yeah.
And why is that the case?
Yeah. Didn't Warren Buffett reveal that about himself about 12 years or so ago?
Yep.
He said, I paid less as a percentage in taxes than my secretary does. Yeah. Yeah. So I gotta share something with you that many people did not know. That is, a few years ago with the prior administration, it was this. Not only will you be able to file your tax return on a postcard, and if you don't believe me, you can look it up. You can look it up. Not only will you be able to now file your tax return on a postcard, your tax rates are going to be lower. Then, Michael, I'm going to turn this around and ask you, rhetorically speaking. So why is it that when my clients came in that following year, instead of getting $500 back like they always did, they now owed $1,100, $1,200, $1,300? Well, wait a minute. What happened to those tax rates? Let me share something with you. While the prior administration was saying your tax rates are going to go down, and we were looking to the right, you don't understand what happened over here, Michael. So I'm going to reveal it right now. Your tax rate.
When you talk about prior administration, just for clarity of people that are watching, you're talking about the Trump administration from 16 to 20. Is that what you're referring to?
I'm talking about Trump administration. What Michael Haney never realized is this. Corporate tax rates dropped by 14%. So wait a minute, before you speak. Corporate tax rates went from 35% to 21%. Corporate, right? We were looking over here. Corporate tax rates were being changed over here. So we as laypersons, we never realized that corporate tax rate. Right? I gotta calm down. Because corporate tax rates dropped all the way down to 21%, Michael, from 35 to 21%, all in one fell swoop. So then you have to ask yourself, after you've heard that, who Who do I know who is the leader of the free world that would benefit from a law like that? Who owns a whole lot of corporations that are now going to be subject to a maximum of 21% in tax, in his or her tax rate? We were looking in the wrong direction. And I'm going to say most of Black America, most of America never realized that. Even tax professionals, many tax professionals didn't realize that. And is that a big deal? No, not necessarily, because not all of us prepare corporate tax returns. So I'm not ashamed if I'm a tax professional and I didn't realize that tax rate was dropped from 35% to 21%. No, I'm not ashamed, because I might not prepare corporate tax returns. But Michael, that's literally what happened. That tax rate changed. Your tax rate, I don't know how that worked out for you, but most of my clients didn't see that. Why? Because at the same time, check this out, Michael. Beginning with 2018, a person could claim maximum of $10,000 of state income taxes withheld, state income taxes paid from a prior balance, and real estate taxes. If you live in a state like New Jersey, Maryland, Hawaii, California, that ate you alive, because those states have really, really high income tax rates. So they maximize the amount that you could deduct on your on your Schedule A itemized deductions. They maximize that to $10,000. Man, that's a piece of cake. That's just a crumb. Again, like I said, if you live in a state with a high income tax rate. So that, on top of the other stuff, kind of it's starting to maybe infuriate is too strong a word, but it is at least coming to people's recognition, coming to people's minds. Well, because I'm sharing it. I'm sharing with folks. I'm sharing as much as I can, really holistically. I'm sharing as much as I can with folks so that they can be educated in the realm of taxes and retirements.
But being educated, Teddy, to what the atrocities are, because that's an atrocity that I guess you're saying that if I had a business, small business that was LLC at that time, I would benefit because my rate would drop as well. And maybe your advice to me, so my rate wouldn't drop. Is that what you're saying?
No.
Your rate would not.
I'm sorry, Michael, your rate would not drop, because an LLC is what we call a pass-through entity. The LLC itself does not pay an income tax. The members of the LLC pay an income tax. But if you're talking about a corporation, a C corporation in particular, a C corporation is going to pay a tax. And that tax, the maximum tax rate, is 21%. So, Michael, I want you to please get out of the habit of saying, hey, what if I start an LLC? Use the generic term. What if I start a business? That is very, very important, my friend, because when you say, I want to start a business, the first thing I want you to think about, or the next thing I want you to think about is, okay, but I'm not going to start this business until I've spoken to my tax advisor, or until I call Teddy the tax man. Why, Michael? Because I might not recommend that you start an LLC. I might recommend that you start a C corporation. I might recommend that you start a partnership. I might recommend that you start what's called a multi-member LLC. So, Michael, for you and for our viewers, let's get out of the habit of saying, hey, I'm going to start an LLC. Replace the word or the acronym LLC, which stands for Limited Liability Company. Replace that with, I'm going to start a business. Please, you will do yourself a favor, because if you say, I'm going to start a business, you can talk to that tax advisor, and that tax advisor will say, okay, what's your service? What's your product? How do you do this? What do you do that? And that at the end, that tax advisor is more than likely going to be able to say to you, okay, I recommend that you start a C corporation. Or I recommend that you start a multi-member LLC. Or I recommend that you start a partnership, whatever. I just want folk to get out of their minds, hey, I'm going to start an LLC. Now, you're not going to start an LLC. You're going to start a business because the LLC structure might not be the best for your particular situation. So
Wow.
please, I
You know,
have to say that.
that is absolutely great advice. And is it your advice that it is of benefit for us to be in business for ourselves if there's an expertise or something that we see as a need that we could provide? Is that an opportunity for us to, begin to grow as a community? And how do you define generational wealth? How do you define passive income?
Yeah. Hey, Michael, great segue. Man, I'm telling you, this is an absolutely fantastic segue because starting a business can be a real good thing. And I'm not encouraging you to start a business just to start a business. You want to start a business so that you can prosper. You don't want it to look like a hobby. So you want to do that and you want to do it well. But let me share with our viewers this is what I call one of the best slash worst kept small business retirement secrets out there. Michael, I promise you that you've never heard this before. I promise you that there's a good percentage of your viewers who have never heard this before. And here it is. You talked about having expertise. Okay, you worked somewhere in corporate America for 17, 18, 24 years. And for whatever reason, you got laid off, you got downsized, you got fired, or you just got fed up with the job. And you say to yourself, hey, I'm going to go on, I'm going to take these skills that I've acquired, and I'm going to start my own thing. One of the issues, one of the problems that we all run into is, oh my gosh, where am I going to get the capital to start this business? I got an idea for you, Michael. How about this? Take that 401k from that corporate America job in which you were working, roll it over into your business's 401k. And yeah, maybe you don't have a 401k in your business, but you know what? You can get one. You can call me and I'll start one up or talk to your advisor, but your advisor might not be licensed to do this. But anyway, you can check this out, Michael. You can roll those monies over from a 401k into your business's 401k, and it's not taxable because you haven't withdrawn. Now, wait a minute. You haven't withdrawn any money from it. You can then borrow from those funds up to, get this, Michael, you can borrow up to $50,000 or 50% of what's in there, whichever is higher, whichever is lower. But the maximum dollar amount is $50,000. And that's the message I'm trying to convey. You can borrow and you can pay that back over a period of 60 months. 60 months, Michael, you're paying yourself back. The interest is going to you. The principal is going to you. All of that is going to you. Guess how much you have to pay in federal income taxes on that? Zero, Michael. But wait a minute. Guess how much you have to pay in state income taxes? Zero, Michael. Guess how much you have to pay in penalties for early withdrawal? Zero, Michael. Zero. I'm trying to tell you this is the best / worst kept small business retirement secret out there. It's the best secret because it's dynamite. It's the worst secret because it is still a secret. Many people don't know about it. So here's your opportunity to do something different, man. Especially in this day and age when so many people are being released from their jobs, downsized, and all that kind of stuff. And I know you see this, Michael, and people are saying, forget that. I'm going out into the world and I'm going to start my own business. Here you go. You roll that 401k over to your business's 401k. You borrow from it. You pay it back over a period of 60 months, and zero is reported to the IRS.
So let me ask you a question. There's a question in the chat that says, can you roll that 401k money into an IRA? Can you take that same money and roll it over into an IRA the same way with no penalty?
You certainly can, but you can't do that second part. If you're going into the business, you cannot borrow from an IRA. There's no borrowing from an IRA. But the person who asked the question, excellent question. The answer is yes. You can roll it over into here we go. A traditional IRA. If you decide to, hey, Dr. McKenzie, how are you? How are you? How are you? Yeah, you absolutely can roll that over into an IRA, but please be mindful that you probably want to roll it over into a traditional IRA. Talk to your advisor or give me a call. A traditional IRA, because every penny that you roll over into a Roth IRA becomes taxable just like that.
Hey, let's give the production team your information, because even though you are dealing with retirement investment now and retirement strategies, what is your email address so they can copy that and put it up for people to touch bases with you, and we can work on that in the last 10 minutes, because I want to focus on something else that I know that you are an expert at and intrigued. So what's that email address, Teddy, of
The
yours?
email address is Teddy at Hunt Valley Retirements with an S on it.com. Let me repeat it. Teddy at Hunt Valley Retirements.com. And emailing is not necessarily the best way to reach
Yeah,
me.
I saw that on your website. You want people to call you. Hey,
Yeah.
give them you want people to call you. Now, this is a novelty in the 21st century. This is a guy you know is good because he doesn't want you to email him. He responds, I know for a fact, but he says, pick up the phone, let's talk. What's your number, Teddy?
It's 410-931-2004. Once again, that's 410-931-2004. My assistant might answer the phone because I might be with the client. But whatever you do, please don't forget to leave your information so that I can return your call.
Hey, so Teddy, you aren't geographically adverse either, so they can call you from Florida or Washington State or wherever and talk with you because, hey, listen, viewers, 60 Minutes in Black America, you have access to Teddy the Tax Man I mean, you guys don't understand. Google him and see what you have access to and who's giving you a number to call, not an email to email, but a number to call for some feedback and guidance, man. This is big stuff. Teddy, as we transition, man, we're down to the last, man, this has gone pretty quickly, man. We're down to the last 7, 8 minutes, man. I want to ask you, a lot of our people, and let's call our people, right? But let's focus on our community. During the past 2 years, the pandemic afforded either falsely or from a reality certain intrinsic benefits from people. Some call it the PPP loan or whatever, SBA loan. Matter of fact, I was watching on TV the other day a guy being handcuffed and walked out of his home into jail because of taking falsely under false pretenses a loan. So people were filing papers and paperwork differently. What happened during the course of the past 2 years as it relates to income, taxable income with small business, particularly with the PPP monies? Because it's not there anymore this year. There's certain deductions that aren't there this year coming up as a result. What are some of those that aren't there as a result of the pandemic?
Oh, great question. Hey, Michael, I don't know how much you were in on this over the last 2 years, but folks were getting some monster refunds out there. I mean, never seen, yeah, you never seen before refunds.
Folks were getting monster refunds.
Let me say this. Please don't kill the messenger.
They're not gonna kill you, Teddy.
Okay.
Tell us what they was doing, man.
It was legal. Much of it was legal. It really was. But the COVID incentives are gone. The earned income tax credit. Yeah, the earned income, don't get this wrong. The earned income tax credit is still there. But that people were incentivized by the extra COVID, the things that were put in there as a result of COVID. So, yep, you saw people walking away with $11,000, $12,000 refunds, double and sometimes triple what their refunds were the year before. Michael, we need to tell folks that's not going to happen with your 2022 returns. So when your tax return is prepared and it's way lower, far lower, much lower than your refund from 2021, it does not mean that the tax advisor did something wrong. What it means is you missed those COVID incentives are gone, probably never to return.
Can I replace them somewhere? Can I start looking for places in the IRS tax code to replace them? Any suggestions on how I can replace them? Because I'm addicted to that money. I got that money. I've gotten used to that money. Is there somewhere sideways that I can look to see if there's other opportunity for me to keep that? Because I'll be depressed.
Michael, you can get 2 more eyes, and then you can get 2 more eyes, and then 2 more eyes after that. You're not going to find these incentives. You're going to find them under tax year 21, and that closed down effective for tax year 22. So let's do a job. Let's do a heck of a job. I posted this on my Facebook page back about a week or so ago, and I said, and I'm going to paraphrase, please do not expect those great big refunds that you got last year. If your situation remained the same, please don't expect those great big refunds because they're not there. The COVID incentives are gone. So when your tax advisor says, well, your refund looks more like it did in 2020 than it did in 2021, he or she is probably correct. I'm sorry, don't kill the messenger. But I got to say this, and this is the way I would do it on television. I would put that out there, and then news travels. Michael, that's our job, right? We got to put it out there. The news travels, and before long, everybody will understand that they're not getting that $11,000, $12,000 refund anymore, and they'll be, if not okay with it, at least understanding of it. All right.
So, Teddy, let me ask you another question. To prepare for next year, what is your advice with some of the throttled down tax benefits we've had for the past 2 years? What is your advice for people in this year? There's 11 months left to this year, right? You talk to people about investing in an IRA if they're with a job, or a 401k if they have a job. They haven't looked at that. You said that savings is the key, maybe purchasing stock. What advice for people do you have to implement as a strategy? And let's start you back off as light skin again, and let's get blue on the face. Let's get blue in the face again, right? Because you said you told them you were blue in the face, but maybe it's a new day.
Yeah.
People are ready to listen, right?
Michael,
what is your advice?
Michael, as folks are out there getting increases in their pay, they should consider increasing their contributions percentage-wise to their 401ks. Michael, here's the reason why. When our parents were out there were a lot of social programs that helped them if they were running short on money. Those programs are gone, Michael. So are pensions. Pensions have dried up. So Congress is doing everything that it can to incentivize people to contribute to their own retirement well-being. It's out there. And I gotta say, Congress is doing it more than likely so that you don't have to go to them and say, hey, look, I need money. I'm suffering in my retirement. So we need to do some different things, such as what I just mentioned. You have that 401k, you've been contributing for however many years. Consider, percentage-wise, increasing that amount every time you get a raise, or at the very least, every year. How about that?
Hey, well, that is great advice, Teddy, and I appreciate so much you being here today. And for those that have not gone to their tax person and have not filed their taxes yet, any advice in terms of preparing for that other than to get an aspirin as they get the amount that they're getting, because it's not going to be like last year? How should they go in preparation for their tax filing for last year, this year?
Remember, last year when they got those refunds, they went, okay, yeah, I'm going to spend, or I'm going to do whatever I can. And so in their minds, they're going to get the same amount this year. It's not going to happen. So you have to plan now and say, well, you know what? Maybe I won't go to Rio this year. Maybe I won't go to Portugal because Teddy the Taxman said that my refund more than likely is not going to be as much as it was the year before.
So if they were smart, you're saying they would bring it somewhere, maybe to an advisor like you, and say, hey, what can I do with this amount? And take a short-term hit for a longer-term gain and look at that as an investment opportunity or a opportunity to contribute to their IRA or 401k. Let's talk to people now. We're both blue in the face, people, because we want to change the dynamics. Teddy said early on that we do what we do because our parents did it. Let our parents do something different to teach our kids something different. Let us take this extra income that we get in the next 30, 60, 90 days and do what with it, Teddy? Instead of going to buy a car or going to buy furniture or going to Rio de Janeiro, what do you want us to take this check and do? If it bring it to you, you're going to find us some money. I know that Jamie says that our kids, let me say real quickly, we have 3 young people that work that you met earlier on the production team. We invested $100 to show them as an example last October in each of them. Their portfolio in cryptocurrency has grown, I believe Jamie said, 32%. So they've gained 32 cents on the dollar because the market was down, right? And hopefully what we hope is a change in dynamics of their thinking, of future generation, a diversity in their portfolio of investment vehicles. Now they get their tax returns. Do you say that with their tax returns, their money, that they should take that money and do likewise and invest it in something, Teddy?
If you don't have anything in savings, consider putting those funds in a savings account. Now wait a minute, Michael, because you're going to say, wait a minute. What about investing? Listen, the first thing that you should consider is a savings account or how about this? One of the best ways of passing on wealth, Michael, is a life insurance policy. Get yourself a life insurance policy and make whomever you want to be the beneficiary or beneficiaries, right? You can pay.
Wow.
Yes, you can get a life insurance policy.
You said the best way, man. Why did we miss that? Why did I miss that? You said a life insurance policy is the best way to pass on generational wealth.
Generational wealth. Look at the small amount that's going into that product versus that great big amount that's coming out and going to your beneficiary. Do you think your 401k can grow that fast? No. Do you think your savings account can grow that fast? No. Are there any kind of investments out there that can grow that fast? Probably not. So
Wow.
The life insurance policy is big, Michael. It is very, very big.
Folks, you heard it from Teddy the Taxman. I'd be a little apprehensive because I don't want my kids coming after me all of a sudden. I got the life insurance policy, made one of them the beneficiaries, and the next thing I know, I drop dead on the golf course. So that makes me apprehensive. So talk to me, Teddy.
Hey, Michael, who said that you have to tell them?
That's real. There's another thing. Keep my mouth closed.
Who said that you had to open your mouth?
Don't tell them, huh?
That's a thought, Michael. That's a thought. Oh my gosh.
Teddy, that is so simple, man. It just shot over my head. Teddy, I really appreciate you being here. Want to be respectful of your time. I also want to make sure if we could put up his email address, put up his phone number again as we transition Teddy off the show today. Let's put up his information again so people can get in touch with Teddy Prioleau with Hunt Valley Retirements. This is your business, right, Teddy?
Yep, that's it. Teddy at huntvalleyretirements.com.
And this is his phone number, 410-931 2004. If you call him, mention that you saw him on this show,
Please.
please, because we've had a lot of people that have benefited as a result. And I tell you, you are getting the best. If you've been going to wherever, call Teddy. He's a gem. He's a gem. Teddy, thanks so much for being with us today on 60 Minutes in Black America. I hope you come back and educate us some more, particularly about that life insurance, man, and
Oh, yeah.
retirement plans. We want to
Yep.
talk more specifically about that. But listen, you have a blessed week. You're an outstanding human being, man. And you know, I love you, and there's nothing you can do about that.
There's nothing I want to do about it.
Thank you so much. Hey, we've been talking to Teddy Prioleau about taxes this year, and Teddy talked about saving. He says over the course of the years, doing 18,000 returns, trying to infer and tell people what we could do to change the dynamics. He talked about saving, talked about investing in IRA. He said if you're going to start a business, you know, why not borrow if you're in a company now from that IRA to start a business that you can roll over with no penalties or charges of interest to that. He also talked about the fact that life insurance policies are the best way to begin creating generational wealth. And why not? Good advice from Teddy. Let's put Teddy's information up there one more time, people. And I encourage you to call him. He said call him. Don't email him, call him. And you'll be surprised at the value of Teddy as an asset in your life, man. It is unbelievable, remarkable, because guess what? I'm going to give him a call tomorrow because I'm going to take my own advice. Hey, you're watching 60 Minutes in Black America. I will not be here next week. Our producer, Leon Thomas, is giving me the week off, and he's going to sit in my place. I'll be back in 2 weeks on February 12th, where I will have a very special, very controversial guest for you. Don't miss it. Have a great week. Thank you so much for watching us today.